Hello everyone, welcome back to Capital Markets Quickie. I'm your host, Endrit Cela. This week, fears over the economy continue amid concerns that the Federal Reserve may have kept interest rates elevated for too long, potentially hurting growth. We also have some high-profile earnings reports and ongoing volatility in oil prices. Let's dive in. First up, U.S. data and Fed speakers. Last Friday's weak July jobs report stoked fears of a possible recession. This week, the economic calendar is lighter. On Monday, the Institute of Supply Management releases its service sector index, expected to point to modest growth. On Thursday, we get the weekly report on initial jobless claims, which are expected to pull back slightly from an almost one-year high. We'll also hear from San Francisco Fed President Mary Daly and Richmond Fed President Thomas Barkin. The Fed left the door open for a possible rate cut in September, so their comments will be closely watched. Next, let's talk about earnings. While most mega-cap companies have already reported, we still have some high-profile earnings coming up. Industrial bellwether Caterpillar and media giant Walt Disney will provide insights into the health of manufacturing and the consumer. Healthcare heavyweights, including Eli Lilly and Supermicro Computer, will also report. U.S. stocks sold off for a second day on Friday, pushing the Nasdaq Composite into correction territory as fears that the Fed has waited too long to cut rates stoked concerns. Adding to the pressure was a drop in Amazon and Intel after their quarterly results and disappointing forecasts. Turning to China, investors will get an update on the economic recovery in the world's second-largest economy with several key releases this week. We start with a private sector survey on services activity, followed by trade data on Wednesday, and a reading on consumer prices at the end of the week. Recent data has pointed to a gloomy outlook, and recent surprise rate cuts reflect Beijing's urgency in shoring up growth. Friday's inflation number will be closely watched for clues on further measures needed to boost domestic demand. Now let's discuss the Reserve Bank of Australia. The RBA is expected to keep interest rates on hold at its policy meeting on Tuesday. Last month's data showed core inflation unexpectedly slowed to a two-year low in the second quarter, and the rate of economic growth moderated in the first quarter. Market participants will be focusing on the central bank's forward guidance, with a 70% probability of an easing in interest rates by the end of the year if inflation continues to slow. Lastly, let's look at oil prices. Oil prices fell on Friday, settling at their lowest since January due to weak economic data from the U.S. and China. The soft U.S. jobs report and weakening manufacturing activity in China raised concerns over the demand outlook. Oil investors are also keeping an eye on the Middle East, where Lebanon's Iran-backed group Hezbollah has indicated a new phase in its conflict with Israel. Meanwhile, an OPEC+ meeting last Thursday left the group's oil output policy unchanged, including a plan to start unwinding one layer of production cuts from October. That's all for today's Capital Markets Quickie. From key economic data and Fed speakers to high-profile earnings and volatile oil prices, this week is packed with events that could drive market movements. Stay tuned and stay informed.